The next panel discussion that we have is on the topic insurance and lending ecosystems. The first speaker of this session is Sumit Bohra, who's the president of the Insurance Brokers Association of India and the CEO of GlobeSecure Insurance Brokers Private Limited. The second speaker of this panel discussion is Gaurav Mittal. Gaurav is the Chief Operating Officer of Shivalik Small Finance Bank. The third speaker of this panel discussion is Mehta, who is the Principal Officer of Tata Motor Finance. The fourth speaker of this panel discussion is Latesh Shetty, who's the Managing Director and CEO of CRIL, which is the Insurance Depository Limited. And to moderate this session, we'll have Karn, who is the Director, Sales, Partnerships and Marketing of Riskcovry. Karn, welcome to the stage.
Thanks, Prashant. Hello, everyone. A very good afternoon to all of you. I have with me today an esteemed panel with people from the insurance industry and from the lending industry. Most of us here have some sort of connection with both of these ecosystems. The idea to discuss right now is how these two ecosystems, the insurance and the lending ecosystems, can converge, are converging, and how this can enable growth for both of these industries coming together. So, if you look at it from a consumer point of view, insurance, access to capital, protection of capital are all intertwined. And can it become the same for the providers as well? So to discuss this, we have leaders from both these spaces with us today. To begin, I would like to actually, begin with Amit. Amit leading the mandate for insurance at a lending organization. So Amit, would be great to hear from you on how you look at insurance as an enabler as far as lending is concerned, and how does insurance play a role in your overall growth of the lending organization?
Thank you, Karn. First of all, thank you for having me here. Insurance and finance lending companies actually go hand in hand. So they do converge because both are the pillars of the country which take the country ahead. Lending companies provide the free capital and we ensure that the capital is secured. So the insurance comes into play to ensure that the risks are mitigated, the defaults on the loans are to the lowest, and the customer is also happy that he's protected in case something happens to him. So we ensure that there is a asset protection which we are lending, of course, to the customer. We also ensure that the customer life is protected, customer family is protected. So in that way we help the country to bring out more entrepreneurs to come and take risk and start their own businesses, startups and all that stuff. Also, now that the industries are converging, there is an expanded reach because now insurance has their own branches. We have our own branches at lending companies. So we kind of start synergizing and try to reach to the last mile. I'm talking about tier 3 or tier 4 cities, which typically is difficult because most of the companies are focused on tier 1 and tier 2. We also ensure that at the time when the customer is kind of being onboarded, there is a service that he's been, bundling is given to him so that the cost effectiveness is there. So the products are bundled. So over 2 or 3 products are bundled at that point of time when he's actually buying a lending product. So what typically happens at a lending company is if a customer is proactive and he sees, and we see that he is actually worried about the asset or he's worried about his own health. So the financial company gives him a better interest rate, so he gets a better discounting. So there's an increased affordability for the customer perspective. There's a lot of innovation now which has started to happen because of the being together. So typically what will happen is we have the data from a lending company of the the customer. So actually, if you really see, I have heard this word data so many times across, data. Who has the data and how do you apply it in the real world? If you really see, the golden source of data is with a finance company. Our data is actually analyzed, FIIE is done, We do Sibyl on it. Every kind of testing is done. And then we have the crisp data with actual customer cohorts, pure customer segmentation. And we move the customers from a FTU, which is a first time user, to SSTR segmentation. So we have different segmentations. So all that is studied, and then we kind of decide what product to pitch which customer. Yes, right now most of it is being done manually, but there is an advent of technology which is happening. And to talk about it at TMF, what we have done is that we are into the space of commercial vehicle funding. Commercial vehicle is a difficult integration because not many APIs are there with the insurance company themselves. So we have got a partner on board. So what we have done is we have done the product configuration at our end. So we have taken the the underwriting engines from the insurance company itself, and we have created it our end, and we have started online comparison of commercial vehicles, first of its kind in the country, and we have started that. So that's our phase one. We are moving into phase two, where we are now bundling life. We are giving him medical options, credit life options. The whole idea is that we are able to do a customer segmentation to the last point, because even while we do financial services FTU and SSTR segmentation, within FTU also there are certain segments where we can actually, based on Internet of Things, or basically if we apply the AI engines, we talk about the big machine learning and all that stuff, we want to know which customer actually can be pitched what product, rather than manual interventions. The aim here is that with 2 or 3 clicks, we are actually, the system that we are building is, with 2 or 3 clicks, we are able to give the customer 3 or 4 selected policies right away, then and there, with 2 OTP and 3 clicks. So he chooses and he has everything on board, with him. So this actually will be a game changer, and this is helping the finance companies because they are protecting their portfolios. It's helping the customers because they are rest assured that they are protected. So it's a win-win for everybody.
Great, Amit. So basically, you spoke about data being an enabler for identifying the right product for that particular customer. And as a financial institution, you have a significantly large amount of data that you can process. Sumit, coming to you on this perspective, right? For an organization, and lenders today, like Amit mentioned, are offering credit life policies to their customers to protect their loans. But what beyond that can be designed to help them in their protection ecosystem by a lender specifically and beyond?
So basically, currently, as Amit said, that most of the time when you're giving a business loan, so you're just focusing on that business. Example, if you're covering a factory, you may insure the factory. But the need is not only insurance of factory on the fire side. You may need a liability. You may need a marine policy. You may need a cyber now, because everybody needs cyber. So we've not moved to that level, because I mean, there is a gap. Generally people won't like to buy insurance. He's being generally forced by a financial institution, because that time he feels that I'm already borrowing money, and on top of it, this becomes one more expense. But I think slowly he will start understanding the way Amit explained, that you're trying to make sure that there is no default. That is one aspect. Second is his and his business is protected. I'll go on to add, even on a business interruption, we're not talking about that. We're all talking about just covering the assets. But if the business is disrupted for a long period of time, what happens to the profit? We already seen in COVID what happens, although COVID was not covered, but I think those kind of events could happen. And I think we need to move forward and understand that the gamut has to increase.
So not just protection of assets, but also maybe protecting the possibility of timely repayments, irrespective of whether the business is continuing at its normal scale or not. So this is about insurance being offered along with loans. Now, if you were to flip sort of the angle here between these two ecosystems, can insurance become a lever for the lending organizations to lend against? We've been hearing about insurance premium financing, how that can increase affordability of insurance. So, Gaurav, you are lending to multiple cohorts of users, and especially in the inclusion segment. So, what are your views on financing the premium for insurance companies? How does a lender look at that particular cohort?
Sure. Thanks, Karan. So I think Shivalik, for instance, basically lends to small businesses. And what our experience has been that apart from what Amit and uh, uh, Sumit mentioned, the customer, he's taking a loan, but he's also looking at two, three other aspects. One was what we witnessed during COVID, for instance, the customer lost his life. And as a result, his family had to suffer and look at the loan repayment. The second point is factory insurance or a shop insurance or against fire and other sort of aspects. But the aside to that, what we also see is that customers sometimes don't have the collaterals that the requirement of the loan may be higher, but they don't have the necessary collateral, but they have a life insurance policy. And that is when that is a very easy option for banks to lend against an insurance policy. We have been doing that. To answer your question about premium financing, that is also a segment that is, I think, very early on. At Shivalik, we haven't really done that, but I think that's an option as we are doing as consumer lending. That's an option that can be figured out and structured in a manner that the bank can continue to receive the payments, and for the borrower or the customer to structure it accordingly. So it can be done in a embedded fashion, for example, in a loan, as part of a loan, property collateral. It can be embedded in that fashion, but has to be looked out. But certainly, I believe once it's looked at carefully, I think there is a opportunity to not only expand the insurance pool per se, but also protect the customer, because ultimately insurance is about protection. So I think the customer perception also, as Sumit was mentioning, needs to change, where a customer just feels that he's being sold an insurance policy versus being shown a value in the policy.
I think you made a very interesting point before this about using insurance policies, life insurance policies as collateral. And I'll come to that. But before that, just to sort of complete this point, Sumit, from as a broker, and I'm talking not just about individuals who are buying insurance, but large value insurance covers that are required today by SMEs, by corporates. And we've seen a lot of cases of underinsurance because of lack of affordability or lack of willingness to pay a lump sum amount upfront as premium. Do you see lending playing a role in such scenarios?
Absolutely. I think, I mean, money is always a problem, it's always short. Short supply is always there. And obviously, if it's an easy ecosystem where he can go and, on 2 clicks, he is able to secure that payment over an EMI, I think uh, the perspective from the customer's angle would change. So if things are easy, I mean, we have seen, I can tell you a use case, like, when you buy a mobile, I mean, we see that, the people who can afford a Apple phone generally won't buy, but the person who is earning 25,000 a month, he would like to buy a 1 lakh rupee phone. Now the reason why he's able to buy is because it's affordable and you can get in on an EMI. I think similar cases out here, if the finance is available and it is
And seamless. It's available and seamless.
and seamless the way it is there, I think probably people will definitely look at that angle.
Thanks. Coming back to the point that you spoke about, I think we have Latesh here from a repository services. And Latesh, we'd love to understand how the use case that Gaurav just spoke about, how can technology enable that use case seamlessly to make it really viable?
Thanks, Karn. And congratulations to IIA for a successful event today, even despite of a election day today. We do not have any life insurers here, but I would like to give a unique perspective to the audience. What is the repository doing in a lending ecosystem here? So we are in a very sweet spot here. So most of the panel members have discussed about the non-life part. So let me just put some figures on the life insurance segment, where today, Sumit would agree that selling a life insurance policy is difficult. And just to give you some statistics, almost the country churns out 7.5 lakh worth crores of premium. And unfortunately, almost surrender is worth 2 lakh crores. And if you look at the life insurance persistency number over a 5-year period, 50% is the persistency. So what I'm trying to tell here is that despite of selling being difficult to the policyholders of convincing them to have a protection, and over a period of 5 years they also discontinue their protection. So what I'm trying to say here is that there is a provision within the life insurance company policies where they can get a small amount of credit support when in case of difficult times, if they want to continue with the protection but they cannot continue because of financial reasons. Here, as a repository, what we are trying to play a role is we are just enabling digital assignments. But the banks like Shivalik and all call, any banking or NBFCs can now digitally help the assignments, and we can provide the lending ecosystem with the platform, where seamlessly, the way we are currently providing unsecured credit, this is a secured credit platform that can be enabled for the policyholder. And as a repository, we are trying to build that platform, and it's part of the regulation that digital assignments are allowed. And that's what we are trying to build and help the ecosystem, both from the lending side and from the life insurance side, to give them that platform and play a unique role here.
And I believe, Gaurav, you mentioned that Shivalik is already lending against life insurance policies. Uh, is there any challenge that you face today that you know, you would want to talk about, or how could that challenge result in an opportunity going forward using technology?
Yeah, so I think as I was mentioning, because we cater to small business customers, so currently we lend against insurance policies, but that process is completely manual. So we have to, we get the policy, we have to go to the insurance company, validate that, get a lien marked, and all of that is completely physical and manual. So I think in that sense, what Latesh just spoke is going to be transformational, because then with the click of a button, I can assign the policy and give the customer loan in real time. So a lot of times what happens is the customer comes to us for a business loan against property. We are lending to him. And as part of that, he wants an additional facility, and that can be typically given instantly against this insurance policy if that is available digitally. So I think from an inclusion perspective, it is very, very transforming if this can be done. And it's a win-win because, for the customer, he already has an asset and that can be monetized very easily.
Even for the life insurers, because persistency, there's a support for improving the persistency numbers, which helps also in when we get the
So
credit.
on one end, you get higher persistency numbers for the life insurance companies. On the other side, you have borrowers who were till now borrowing unsecured, which was at a higher interest rate and a higher risk for the lender as well, getting converted into a secured lending book, which is again beneficial to all parties involved. I mean, this is one. And to enable this, ultimately, this is already happening, but to enable this, you need the right technology to be able to make it easier for all parties to do. Uh, when we talk about technology, insurance industry, unfortunately, has been lagging its peers in the lending or the payment space. And while assignment is one part that could be the future, today, even getting policies issued with loans becomes challenging because you're trying to ensure not just the life of the borrower, but also the asset. And as Sumit, you mentioned, also potentially business continuity. So, Amit, in that context, when you work with multiple insurance companies, how do you ensure that you manage your process while at the same time keeping, uh, you know, keeping aligned with multiple other organizations, multiple other insurance companies that you work with?
See, typically what happens is the goal is the same, whether be any insurance, general life, or uh, any partner, be X many insurer. Everybody is trying to secure one aspect of the loan. So if it is a general insurance, it would be typically trying to insure the asset or the immediate health of the customer or his family members. If it's a life insurance, then for the tenure of the loan, we are trying to cover the customer, in case something happens to him. So when the goals are common, and they basically, then it is only a matter of which insurance company aligns quickly with the systems that you have at home, and seamlessly which can integrate. Though it's not an easy job, if you ask me, because both lending company and insurance company, and even today while we speak, operate on disparate systems. They have their own set of systems. We have our own set of systems. To actually get them married is not easy, but when you have a common goal, actually you find a middle way, and that's what we have done. So we have got a partner in between who helps us in digitally or technologically, or what you call Insurtech, covers that gap for us. So I think going ahead, the way we are seeing, in fact, over last 2 3 years that I personally have seen in the industry, there is an advent of Insurtech in the country, and they're valuable. They are see, we are traditional in lending companies, insurance companies that I deal with. These are legacy insurance companies. Like in house, we have Tata AIG, we have our Tata AIA, we have our own in house companies, but these are legacy companies. So now we have to get integrated with our own systems, which are also traditional. So we need some partner in between who comes, with great digitalization, or as I told you that we have this golden data with us. How does he help provide me AI and machine learning tools to give me the inputs? What do I need to sell to that XYZ customer? And with the integration of IoT, datamatics is there, telematics is there. Now we are our own group company Tata Motors has a lot of data in, which we keep. If we want, we can have that to figure out which customer is driving, what is his driving habits. And so can we then for our own set of customers, I know for private companies it is having, for commercial vehicles, can we do pay as you drive, or some kind of innovation? So a lot of innovation comes into play at that point of time. Customer also nowadays is moving into he expects from lending company also some kind of uh, you know digitization. So he's looking at customer self-service portals. He's looking at I want to do my service on by myself. He's looking at basically everything is digital at this point of time, even from customer. And he looks at, you tell me what I should have. Basically everybody talks about his asset and life, but if you want to just give him one cover fit all kind of cover, so then he is not very okay with that, so he tries to look at something else. So these are some things that we work around with the customer in our
Product customization along with the lending journey is something that is the future that you see as far as credit attachment products are concerned.
absolutely.
We've spoken about 2 or 3 sort of different disparate topics on how these two ecosystems could align or sort of intersect. It could be offering a variety of products on the credit link side. It could be assignment of policies, life insurance policies that have an inherent value to be monetized against. We've also briefly touched upon how lending can, you know, be a lever to make insurance premiums more affordable. Before we move further, any questions from anyone in the audience?
Hi, good afternoon. In terms of understanding and leveraging the financing with respect to the distribution channels and various kind of distribution strategies that are there in the country, we still see that there's a lot of issues that crop up, especially in the health financing, health insurance financing, and I mean the data says that there are a lot of NPAs that are also cropping up. So, is it something that now it's getting changed, or what are the measures that are being taken by the lending community, and what is the deployment of technology that is taking place in this regard? So, if you can just answer that, sir.
So while I'll talk about my experience from Tata Motor Finance. We did so we have two kind of programs. We call it preventive health, in which we give our customers membership for the 365 24/7 consultation with doctors and blood check, all those frees in part of the membership. So we do not see any challenge in that. In fact, most of our customers welcome that. And in fact, I'll tell you, I go to that extent that there are fleet customers, and specifically I find this at southern India. These customers, so when we, let's say, finance 300 small commercial vehicles to them, or 200 trucks to them as a fleet, they actually pick that for their entire driver community. So we do, and this what they do is they portray in their community ki if you are with me, I'm talking about the SSTR customer. He says ki I take care of the drivers also. So and we also get a good feeling that we have been able to do something for the drivers, because more or less it is always about talking about the retail customer or somebody who's buying the loan. But this time, so we have a certain product which works on that. We did also the product that you are talking about, indemnity product. I think you referred to the indemnity product. We did that during the COVID times. We are not very aggressive in that space because we focus more on the life insurance part. Each NBFC or each bank actually has a different way they have originated over different years of operation, and we found that CLI is much more convenient for our customers rather than medical insurance, because most of the times for my customer segment the average age is around 47 to 50, because MNSCV customers, fleet customers, they are of a senior age. The moment you hit a ceiling of above 45, you have to go for medical, and then the rate ups happen, and sometimes declines happen, and all that happens. So it leaves a bad taste at point of time. But once we had, during COVID times we had, and we found it was at that point of time it was pretty successful, but we could not carry the legacy on, because once the funding started. So I am not aware how does it actually create an NPA, or NPAs are increasing because of health. But typically what I can say is, if I just take the CLI experience, it actually helps us to bring down our NPAs. So minimum 30 to 40% of our customers are, getting into claims, and we claim that money back from the insurance company. So it is actually helping the NBFC in getting that money back, which actually would have been an additional load to the family of the customer. We would have had to recover it from them or seize the vehicle or that. So this is actually helping the customer in that sense.
I have a question for Latesh. Latesh, whether the repository offers APIs to to do assignments digitally, and do we have APIs to convert a physical policy to a dematerialized policy? Does APIs available so that more and more policies which are physical in nature can be dematerialized and assignment can happen digitally? Does these APIs are available from all the repositories? And how easy is to do that?
Yeah, so as part of the regulation, digital assignments are allowed for the repositories to be done. So as of now, those APIs are to be built bilaterally, so not readily available as a common platform. And that's the precise thing that we are building up going forward. We are on discussion with a couple of insurers with whom we are building these pipes.
And to convert a physical to a dematerialized policy, do you have anything?
Those APIs are readily available. So any policyholder today, from a consumer point of view, any policyholder today can log into our portal and he can open a free electronic insurance account and map his policies for all the insurance partners whom we have listed in this.
So
We have
APIs are available for that as well.
yeah, those are readily available.
Okay,
So
thank you. Really appreciate it.
Traditionally, also no physical copies were asked. It used to, you fetch the number, you put the things in the system, and then you get it verified from the insurance company. If everything is true, then I think the policy will be dematerialized. Am I right?
as part of the current process, so both the processes are open. Traditionally, insurance companies were supposed to give the option to the policyholder during the proposal form itself, from which amongst the 4 IRs which are present, they have to choose. So the choice was with the policyholder. The moment policyholder chooses any of the 1 IRs, then the back end seamlessly the accounts used to get opened. What we have now done is that we have opened it up voluntarily. Any policyholder in the country can now log in, do a digital KYC, and create a free AI account and map his policy. So we have opened both the channels. That's
I actually have a regulatory question on both sides, right? One is that when you're assigning a policy for the purpose of lending, is it okay for a insurer to give this as a benefit to the customer, that you buy a policy from me today and you could potentially assign it, 3 years later when it has a certain surrender value? Can they talk about it? Or would it be or would it be lender initiated? For example, if a particular service is available, which entity in the ecosystem would be promoting this service? Because ultimately, that is where awareness will come from. Would it be the insurer or would it be the lender?
I think from my perspective, yeah, insurers, of course, but from bank's perspective, we have been making a lot of our customers aware that this option exists. So I think definitely from a bank perspective, bank can go ahead and do that. But yes, primary responsibility. I'm not sure what the IRDA regulations permit, but if that is permitted, insurance can definitely should be doing that.
Obviously, I've seen that the distributors do mention to people that whenever you buy a policy and after it attains a surrender value, because sometimes you buy a high value policy and you always have that in the back of the mind that if I'm not able to pay the premium, what does happen? So this option is always given that if you are not in a position to pay the premium, you can always assign the policy, take a loan, pay for some time, and then whenever you have money, you can do that. So that's how some pitch does happen. And I think LIC used to do that, that they used to tell you that, whenever you need a loan, you can come back to us. We'll charge you a percentage higher than what the bank charge. And then whenever you have money, you can pay back and, get your policy. So I think that the practice is there.
So as far as LIC is concerned, obviously they don't open the books for third-party finances. They do it, but there are certain banks who have actually listed the insurance companies against which they do the lending. But it's purely up to the policy holder how he wants to. I mean, he's first of all he should be aware that such a facility is available, and obviously the brokers and the intermediaries do come into picture here. But in the offline mall today, assignments do happen, but it's completely physical. The dematerialization will help them to get this facility digitally.
And there is no regulatory restriction on promoting this as a feature of the
It's not I mean, the insurance industry doesn't want to promote this per se. It's just a facility
the
given.
facility.
And we as a repository, we're just a facilitator. So that's the ecosystem has to take care of the promotion and awareness of the system.
Sometimes it feels like a negative thing when you promote. So I think that is the reason people have not been promoting this. But probably, going forward, when you feel that there is a crunch in the system in terms of, people are buying so many things on EMI and all that. So this could be an option which could be talked about.
Just now, extending to what Sumit said, just to give you an example. So there is a segment of micro markets where today people have insurance policies which has a surrender value, but they are not on bureau records. And they are not even aware that such a facility is available. So when you have a temporary finance crunch, typically you go out to the marketplace where the loans are available, right? Nobody goes to the insurance company when you have a short-term credit. So that's where making this system available will help both the lenders because they get a secured portfolio and also the policy holder and who is in the requirement of short-term funds. If this can be made easily available for him at the marketplace, where the lending happens, so that will be a win-win for both the life insurance company as well as the policyholder, and obviously for the lenders because they get a secured book. They get a secured book. Yeah.
If I can just add, I think philosophically, banks and insurance companies need to travel some amount of distance to, I think, create trust among customers. Because I think right now, from whatever we see from our customer bases, there is still some amount of mistrust that, what is this insurance policy? What will it help me? So I think there is some distance to be traveled. And I think both banks and insurance companies have to work hand in hand to create that trust. And I think then it will be even a better enabler.
Yeah, I think so. Adding to that point, once we have the actual digitalization happening, there's a lot of customer literacy on terms of the financial literacy, insurance literacy, which can be done online. So this will actually, and you are right, because we also see this, and especially when we go down to rural markets or tier 3 and tier 4 to lend, insurance is not taken as easily because they are afraid we are just, what are we selling, whether the claims will be paid, the policy is so big, who will read it? So I think the advent of digitalization in the space of insurance, and I'm very vocal about it because that's what I'm implementing, the change in the organization, and it is there. I feel we are already late, but this is what we are heading towards, both the financial services in terms of the lending company and as well as insurance would actually start operating on one frame and giving customer an absolute value at the time of purchase of whatever he wants. Whether insurance, he does not have money to buy insurance, then the premium funding financing is then what we were talking about. Or if he wants to buy maybe he has money to he wants to look at a finance product and he has some policy and you want to assign and take some credit from there. So all these gimmicks are possible. Everything once we start moving into space of digitization.
Fair enough. Thank you. Thanks, everyone. I think we're out of time, but thank you for an engaging discussion. Thanks a lot.
Thank you.